Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I'm going to describe about RBLR Trend Analysis 2019 to 2026, how repo rate changes influenced borrowing costs. Introduction. The repo-based learning rate RBLR is an important benchmark used by banks to determine interest rates on various floating rate loans, including home loans, vehicle loans, and business loans. RBLR is directly linked to the Reserve Bank of India's repo rate, making loan rates more transparent and responsive to monetary policy changes. The period from 2019 to 2026 witnessed significant fluctuations in RBLR due to economic challenges, pandemic-related policy measures, inflation concerns, and changing interest rate cycles. RBLR movement during 2019. The RBLR framework began with a lending rate of 8.25% in September 2019 when the repo rate stood at 5.40%. Subsequently, the RBLR declined to 8% from October 2019 onward as monetary conditions eased. During this period, the markup remained constant at 2.85%, indicating that changes in lending rates were primarily given by adjustments in the repo rate. Impact of the pandemic 2020-2021. The COVID-19 pandemic prompted the RBI to undertake aggressive rate cuts to support economic growth. As a result, the repo rate fell from 5.15% at the beginning of the 2020 to 4% by June 2000. Reflecting these reductions, the RBLR declined sharply from 8% in early 2020 to 6.85 from June 2020 onward. This represented one of the lowest lending rates periods in recent years and provided substantial relief to borrowers through lower EMIs and reduced borrowing costs. Throughout 2021, the repo rate remained unchanged at 4% and the RBLR stayed stable at 6.85%, creating a favorable environment for home buyers and businesses seeking affordable credit. Rising inflation and rate hikes 2022. As inflationary pressures increased globally and domestically, the RBI, Reserve Bank of India, began raising the repo rate during 2022. The repo rate moved from 4% in early 2022 to 6.25% by December 2022. Consequently, the RBLR increased steadily throughout the year, 6.85% in early 2022, 7.25% in May or June, 7.75% in June to August, 8.25% in August to September, 8.75% in October to December, 9.10% in December 2022. This marked a reversal for the low interest rate environment that borrowers had enjoyed during the pandemic years. Peak lending rates during 2023 and 2024. The interest rate tightening cycle continued into 2023. The repo rate reached 6.50%, resulting in RBLR levels between 9.10% and 9.35%. A notable development during April 2023 was a temporary reduction in markup from 2.85% to 2.75%, which brought the RBLR down slightly to 9.25%. However, borrowing costs remained elevated compared to the pandemic period. Throughout 2024, the repo rate remained unchanged at 6.50%, and the RBLR largely stayed between 9.25% and 9.35%. This period represented the highest sustained lending rate environment in the data series, increasing EMI burdens for borrowers with floating rate loans. Beginning of the easing cycle in 2025. With inflation moderating and monetary conditions improving, the RBI began reducing the repo rate during 2025. The repo rate declined gradually from 6.50% to 5.25% by December 2025. The RBLR followed suit, 9.35% in January 2025, 9.10% in February to March, 8.85% in April during April-May, 8.35% from June to November, 8.10% in December 2025. These reductions provided meaningful relief to borrowers and signaled the start of a new easing cycle. Stability during 2026. As of June 2026, the repo rate remained at 5.25%, while the RBLR stabilized at 8.10%. The markup continued at 2.85%. Although borrowing costs are higher than the historic lows seen during 2020 and 2021, they are significantly lower than the peak levels experienced during 2023 and 2024. This balance offers borrowers greater affordability while maintaining financial stability. Key takeaways: lowest RBLR recorded 6.85% from at in 2020 to 2022, highest RBLR recorded at 9.35% in 2023 to 2025. Repo rate fell from 5.40% in 2019 to 4% during the pandemic. Repo rate subsequently rose to 6.50% amid inflation concerns. Rate cuts during 2025 reduced the RBLR from 9.35% to 8.10%. RBLR movements closely mirrored changes in the RBI's repo rate. Borrowers with floating rate loans experienced both significant EMI reductions and increases during the period. Conclusion: the RBLR journey from 2019 to 2026 highlights how monetary policy directly influences lending rates in India. The pandemic era brought historically low borrowing costs, with the inflation fighting phase of 2020 to 2024 resulted in higher loan rates and increased EMIs. The easing cycle that began in 2025 has restored some affordability for borrowers. Going forward, future RBLR movements will continue to depend largely on RBI's policy decisions, inflation trends, and overall economic conditions. Disclaimer: this article is intended solely for educational and informational purposes. Interest rates mentioned are based on historical RBLR and repo rate data provided and should not be considered financial advice. Actual loan rates may vary depending on the bank, borrower profile, loan category, credit history, and applicable terms and conditions. Readers should consult their banks or financial advisor before making borrowing or investment decisions. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.